Hello and welcome to this session. This is Farhat, in which we will look at review of financial statements. What is a review of financial statements? It's a service that provides a limited level of assurance, position between a compilation, which we already talked about in the prior series of recording, compilation, where we provide no assurance, and an audit. So it's in the middle of a compilation and an audit. In an audit, we provide the highest, it's called a reasonable assurance, the highest type of assurance. Well, why would a company would want a review? Well, the same reason that they want a compilation. Maybe they need, if it's a private company, they need to borrow money from the bank. Well, sometimes the bank would say a compilation will suffice. Or sometimes the bank might say, we need a review. That's one reason. The other reason is publicly traded companies, when they issue interim financial statements, they have their financial statements reviewed, the quarterly financial statements. Regardless, we need to know what is review of financial statements. So the result of a review is a report in which the accountants state that they are not aware of any material modification. This is what we mean by limited level of assurance. Just we are not aware. It doesn't mean it exists. We are not aware of any material modification needed for the financial statements to conform with the financial framework that we are following. That's it. We're not aware. There might be issues, but we're not aware of any. We did our work. Now, what work did we do to form this conclusion, not opinion, to form this conclusion? The accountant primarily relies on inquiries, which is asking management questions, and analytical procedures. Now, keep in mind, we're going to have a whole session about what are inquiries, what are analytical procedures. Those are the tools that the accountant will utilize to be able to issue a review. Now, unlike an audit, it does not require an in-depth understanding of the internal control or any assessment of the control risk. So it's below the level of the work of an audit, but above a compilation. So it's in between. So notice, yes, we need a little bit more evidence. So what type of evidence? So let's talk about evidence. Compilation, simply no evidence. In a sense, we don't ask for any evidence. What type of evidence do we use for review? We do two things. We do inquiries and analytical procedures. Now, in audit, we have a lot, including inquiries and analytical procedures. But in this session, we'll focus specifically on review of financial statements. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Hello, my name is Farhat. You are here because you are either an accounting student, a finance student, or someone who's studying for their CMA or CPA exam. Great. You are looking for some additional help, and we can help you. I strongly encourage you to visit my website, farhatlectures.com. I offer additional lectures, resources, including PowerPoint slides, multiple choice questions, in some circumstances, exercises, and true-false questions. Our material is aligned with your CPA review courses, with your CMA review courses, with your college courses. I offer a risk-free trial that you can try to find out whether my website can help you or not. If you find it helpful, you subscribe, you keep your subscription. If not, you cancel and your risk is free. If you like this recording, if you like my lectures, you would like what's on the website, give me a chance to help you with your college courses as well as professional certification. I hope to see you on the website.
So what is the accountant objective, and do they need to be independent? Well, I hope you know they need to be independent because we are providing some level of assurance. Although it's limited, once you provide assurance, you have to be independent. So the primary objective is to provide limited assurance. What's limited assurance? We don't require significant modification based on the framework. Now, how do we do so? Through inquiries and procedures, rather than extensive testing and verification, which is for an audit. Since a review engagement provide some sort of an assurance, limited, the independency is required. We must be independent of the entity when performing a review. What does independence mean? It means that the accountant cannot have financial interest in the company or be involved in the decision making. Now, we'll talk separately about independence according to SARS, but we have to be independent. Now, when we conduct this review procedure, is it all the same for every company? Not really. You could have a retailer, you could have a real estate, you could have a software company. A review is not one size fits all process. The accountant must adopt their procedure based on the entity's specific circumstances using inquiries and analytical procedures. If significant operational changes have occurred or if certain financial statements are complex, additional procedures might be necessary. What are the factors? There are several factors that play a role in the nature and extent of the review procedures. Like how much work do we do? Well, it depends on many things. One, the nature and materiality of the financial statement items. Well, revenue recognition policies in a retail company may require closer examination because of varying sales term. Well, if you're dealing with retail company, well, you have to look maybe at the revenue recognition. And other companies, maybe revenue recognition is easy. All their sales is through a credit card. That's it. For example, Farhat Lectures, all my sales is people pay me through a credit card. There's not much to the revenue recognition. The likelihood of misstatement. Well, you have to guess, or not guess, you have to kind of say, okay, what's the likelihood of a misstatement? If a company recently changed accounting software, there might be a higher risk for errors. If that's the case, you have two software companies. One changed the software, the other one did not. The one that changed the software, well, there's more likelihood of a misstatement because of that change. Knowledge from current and prior engagement. If this is a second year or a third or a fourth or a fifth year, the more work you do for that client, the better you are going to know them. The less work you have to do, the more comfortable you are going to be. For sure. Also, if you have a new client, let's assume in their retail, and I still remember this supplier, tobacco supplier, where we had few of them. So I understand the business inside out. So if you understand the industry, or if you have them for several years, it's going to require less work. Let's put it that way. Why? Because you understand them. So if the accountant has worked with the entity in previous years, they might be aware of recurring issue that require attention, or they know that the record is reliable. We can move faster. Qualification of the entity's accounting personnel, and you see this. Who prepared the original record? Was it a part-time bookkeeper, a full-time bookkeeper, someone who specializes in QuickBooks, someone who don't know what they're doing, a college graduate, a CPA? Who did the work? If the accountant team lacks experience, additional review procedures might be needed. Well, sometimes some companies, they kind of give you everything all done. Just have to run the numbers. The extent to which an item relies on management judgment. Do they have a judgment to make about the accounts? Do they have bad debt expense? Do they have warranties? Do they have to impair assets? The more judgment they have, the more you have to be careful, the more work you have to put in. And weaknesses in the entity's underlying financial data. If the company records are disorganized, well, you need to perform more detailed analytical procedures, because now you have to be very careful if something is missing. So the point is, not all reviews are the same. It depends on how much work you have to do depending on the entity that you are dealing with. Some additional requirement when performing a review: the accountant must adhere to specific performance requirement to ensure consistency, reliability, and compliance with those standards. These requirements help what? Help ensure that the review engagement provide limited assurance while maintaining professional integrity. So what are some of those key performance requirement? What are some of them? Well, the first thing you have to do, just like in a compilation, just like in everything, you have to establish an understanding with the client. You have to have an engagement letter. You have to tell the client exactly what you are doing and do it in writing. Clearly define the scope of the review in writing, and we'll look at a review letter. You have to gain sufficient knowledge of the entity's business. You have to learn. You have to about that business, about that industry, especially if it's a new business in a new industry. And financial reporting practices. You have to gain that knowledge. You have to discuss financial information with management or those responsible for financial reporting. You have to know how to ask the questions, who to ask, what to ask, how to get the proper answer. You have to perform analytical procedures. As I mentioned, those two, we'll talk about those two in a separate recording. You have to perform other necessary steps, take additional steps based on identified risks and concern. You have to obtain a client representation letter. We'll have a whole recording about this. Securing written confirmation about key financial and operational matter. You have to use professional judgment to evaluate the result. We'll have a whole recording about this. Notice we are just introducing the topics that we're going to be covering. We're going to have maybe 7 to 10 about reviews and maybe 4 to 5 about review reports. So there's a lot. And then we have to communicate the results through, you got it, reports, summarizing our findings and conclusions. So establishing understanding with the client. I'm going to start with that. What should you do? Now you want to go to Farhat Lectures and look at additional resources, additional lectures. Whether you are an accounting student taking an audit course or preparing for the CPA exam, the best investment you can make is investing in yourself. Good luck, study hard, and of course, stay safe.